Good afternoon, everybody. This is Prince. It's 4:20 p.m. 10 minutes prior to the U.S. equity market open. This is again with you, Prince M. Goals, and we are watching the crude oil non-expiring continuous CFDs. The broker again, as always, is avatrade.com. If you don't have a demo account or live trading account, click on the link below to get one. All right, and the platform that we're using, as always, is the MetaTrader 4. We've got some indicators. Just this at the top right corner. This indicator is just, I call it a spread detector. It was gifted by a friend a couple of months ago, a long time ago, probably almost a year. But the one indicator that's really important for making our trading decisions is the 20 simple moving average. I always keep repeating in my videos. Here's how the strategy really works. When you have a bar open, a fresh new bar that opens above the moving average, like here, this one, it's your buy entry, and look how successful this has been. Okay, it is a 254 point move, and I'll tell you what, I'm not happy because I didn't enter this trade. Okay, I was busy in something very not important and I missed it. But anyway, for sure the other traders did cash it. Some of my members and students did take this trade. So the strategy is really simple. Above the 20 simple moving average, we are bullish. If we get a candle above it, a new candle open, we are bullish. And if you wanted to short sell, you want a candle here like this one, close below and go down. This is even a good trade. But if you missed a breakout, you know we always take those pullbacks. Here's another mistake I did. This was a new after the market pulled back towards the moving average at a new candle open. Below it, I took a short sell, which went in my favor good, about 95 points. I had no stop, nothing, and suddenly the market reversed. It closed here, and I lost about $80, about 43 pips. Okay, when the market opened here. So not bad, 40 pips loss, but if I re-entered it again, I would have made 246 is what's going on now. And yeah, but anyway, I'm so pissed. I don't want to discuss about the missed opportunity. Again, the markets are always going to be here. For those who have missed this buy entry, what their option now is, let the market pull back towards the moving average or come back at this entry area again. Okay, and better it comes at the moving average and closes above it again, touches and closes above at the new open, you can buy the markets again. Alright, that's one way. But how you exit when the market closes below the moving average? Let's say you were short selling here, which is the ideal entry, and the market closed above here, you would have exited. This is one way. Or you can keep on trailing your stop behind each candle's back when the stuff goes in favor too much. Let's say 100, 150 points, lock in 50, 100, 150, 150. Or if you're someone who just wants money, not percentage or points, if you get your desired kind of money or above that, lock what's your daily goal or weekly goal. Alright, that can be sorted. But for now, this video is only about trading analysis on the crude oil. So what are we seeing here? Let's get to the point. We've got a strong resistance at this area. One. First of all, this is the resistance, and then this is the recent resistance. See that? And we are breaking above it. We've got a support as well here. This was also one of our good support areas, if you remember, chopping around it. So you've got the idea what's the trading range, and this trading range size, about, it's more than a month now, it's 600 points. So oil is stuck between 56 to 62. A nice trading range. You've got a couple of options. Let the market always come down. Scenario number one. First of all, we are above the resistance line. Okay, the markets, the buyers are taking control. So another final resistance around this area. Let the market touch this area, pull back. Okay, if it fails to first let it pull back, put your buy stop above 5 to 10 pips above the resistance, key resistance, and continue for it to trend towards the upside. If it's a failure, if it fails to reach here or fails again to make a new high, look for short selling opportunities. Oops, sorry. This is what's going to happen. You're gonna get a high and then a lower high, and this lower high should continue towards taking you towards the downside. And when you're coming down and you're near the moving average, okay, now look for buy opportunity again. Unlimited money supply. So we've discussed three probabilities. A buy stop above the resistance at 62.51. To be accurate, it's around 62.54. So you could place a buy stop at 62.60 or 62.65, but I feel it's better not to place a buy stop above it. Wait for the pullbacks. Okay, so the market's gonna pull back. First is a breakout. If the breakout is not a success, you take a short sell. Okay, you look for the M pattern below the swing low. You take a short sell, continue trending towards the downside. When you reach this big support zone around here, okay, look for W pattern. By the way, W pattern can also occur here. Let me draw it for you. Maybe what's gonna happen is it's gonna go like this, down around this area. This is how you might get the next support, and then you trade towards the upside. Okay, hey, let's focus. Breakout, first scenario, possibility, a buy stop at 62.65, a reversal, a candle close, probably you need an M pattern. Okay, a short selling opportunity, a stop. You could put a stop loss behind the previous highs, above the previous highs. Second scenario, stop loss. Third scenario, you missed a breakout, and if you're feeling this is a key resistance area, the market should collapse down back again. Let the market come down, look for W pattern, and ride it towards the upside. Fourth is you don't trade in the center. You say, there's a saying, one of my mentors taught me this: don't fiddle with the middle, because the middle zone is the chop zone. When you get stuck in it, it's really brutal. Okay, you'll be hitting those stop losses all the time. So fourth opportunity, which would be, instead of taking at the moving average, probably let the market come down at support area. Okay, make a W pattern, then push up, break above the moving average, then take a buy. Alright, very easy analysis on oil. So if you have any questions, feel free to ask me. This is Prince. Alright, have a great trading week. Bye bye for now.